Hey guys, Mike here. So, oh boy, one of those definitely volatile days, but guess what? Ended up green. But it's one of those days where we'll put another 1% drop midday, right, before we recover into the record book of that record we're chasing from '08 and '01 for the most 1% midday swings in a year, which I think will hit. Let me know in the comments what you think. I have no doubt we're going to set the record this year, but we'll see, okay? And so we're going to start off with something that happened this morning, if you didn't notice it. And if you're into semiconductor stocks, precious metals, tech, really doesn't matter. But you know, you can watch and see what happened this morning. I'll show it to you. And then we're going to go into the more important part, which is why are some of these stocks, whether they're high risk, gutter stocks, unprofitable, doesn't matter what industry in, why are they basing out, right? What is happening to trigger this? And I'm going to show you there's really three reasons. One is a huge X factor that we did not have really in '08 and '01. So that's what makes this market so different, okay? And the first thing we'll go into is what happened this morning, right? You might be wondering, like, I don't understand, because certain things were going up like crazy. And what happened was, see this dollar right here? Obviously been showing weakness. You're seeing, you know, lower highs and stuff. But obviously it fell off a cliff, okay? Starting this morning, boom, falls down, right? Right out of the gates, then starts to recover. Now, why is this important? Well, of course, as soon as that happens, you get the calls going, oh my God, gold and silver are about to go to $1 million. We've been hearing this all year. Maybe this is the time, but precious metals were way more than this. This is after the dollar recovered. But more importantly, SOXL, which is a 3x leveraged ETF, which covers all the semiconductors, you know, NVIDIA and all them, AMD, TSM. Well, look at what happens when the dollar drops. It is great for semiconductor stocks, okay? This right here was a 10% move in a very short amount of time as it dropped, but then look what happens. The dollar starts to stabilize, and the semiconductors are like, uh-oh, this ain't good. And then immediately gives back basically all the gains in this ETF. I know NVIDIA at one point in time was up 5%, went down like 4% just off the dollar, barely moving up, not even to where it was at the open, right? But when you see the dollar go down, this is what traders do every day. They check the dollar because it trades, it trades 24/7. But, you know, if you see it, they already know what's going to happen before open anyway. And so they're just waiting to see. And usually when this happens, you'll get a move up in semiconductors. So if you see semiconductors rallying, you see precious metals rallying, some tech stocks, is because the dollar is weakening, okay? And you can see, and look at that volume on the dollar, by the way, good Lord. And you can see back here, I mean, that's the gain there. That's a 30% gain I'm showing you in a very short amount of time as that dollar fell off, right? And this is sitting here in the daily chart. So within, what is that, 10 days of falling off, you get a 30% gain. And I remember that week right there at 10-day range, because that's when semiconductors really started to recover, especially NVIDIA. I think it went from 115 to like 140 or something. And so you can see when the dollar was getting stronger, look at that drop. I mean, you remember semiconductors, we all thought they were going under, like NVIDIA's going under 100, AMD's going to 50. And don't forget to hit that like, subscribe button, guys, and share the video. It really helps beat the algorithm and push the videos out to new people and continue to grow the community. I really appreciate everything, guys. And so that is something to watch closely. And again, wouldn't dare be the one to call a top on the dollar, because there's been people calling for that all year, and it just keeps getting stronger and stronger and stronger. And so I'll wait for inflation to get under control for, you know, I would try to make that kind of call. But if you're into any of those types of investments, watch the dollar. You can see right there, or trading for that matter. A lot of people making a lot of money doing that. Now, going on to why are there so many stocks that are basing out or finding a bottom right now? I don't mean it's the permanent bottom. Some of them have been there for quite a while, and I mean like a matter of like many weeks, okay? And some are just finding it, maybe, okay? And so I'm going to give you some examples of what I'm talking about here before we even get into what's causing this, right? You go into BNGO, which we ain't seen in a while, right? But again, goes down 92%, all right? And this is important. Watch the numbers, the percentage-wise of what's happening here. Because larger stocks, between 75 and 83, somewhere in there, 75 to 80 really. But then these smaller cap stocks, you're looking around between like 88 and 92, right? Here's DraftKings, goes down 86%. You can see it basing out right there. It's like you saw BNGO, right? And then you go over to Teladocs. Man, company's supposed to be completely dead, but all of a sudden it goes down 92% and finds this box to start trading in. Look at that, basing out. Mara, we know what industry it's in. 93%. All of a sudden, wow, look at that right there. It finds some buyers, a lot of buyers. Coin, we know what's going on with that one. Obviously down today for a lot of stuff you guys don't know. I already showed the members why. Make sure you look at that. Down 88%. Then all of a sudden starts recovering and finding buyers. Square goes down 82%. Bam, recovers. Roblox goes down 85, and it's been for weeks now trading that box. And then you go to Baba, obviously a Chinese stock which its own government has killed, goes down 82%, where it's at now, and this is the one you got to watch. That one, these Chinese stocks. Watch XP down 90% now, and guess what? It's up 20% in the last 2 days, by the way, just FYI. I think Baba's up about 12. NEO's up 15% in the last couple of days after going down almost 88%. And of course, why is this happening? What is this magical number? Well, it's pretty obvious when you look at the volume bars and you sit there and look at the numbers that every one of these only, because they're in different industries, right? Different kind of stocks, different market caps, everything, right? Some are small, some are mid, some are larger caps. I mean, so what's the deal here? Well, one, think about it. If you're shorting stocks, if you short a stock all the way down like that, and you're sitting there going, wow, it's down 90%. Where's the risk reward going to happen here? Did it flip the script on you? Yeah. So you go, we just drove it down. And so you know those algorithms are kicking in. And when you cover shorts, of course, you're buying back the stock, which of course stabilizes the stock and starts to push it up. As you can see right here, we just got this data today come out. Russell 2000, small caps. What's happening? People are covering their shorts. They have way less shorts on now. When this goes up, that means obviously they got way less shorts out there versus when it's going down, they're shorting the heck out of it. And so that's one of the things that happen, okay? And so that's why you'll see that in many of these stocks that have just been pummeled because they made so much money pushing it down, and now it's time to cover. We got to buy back the stock, give it back, right? The other one is going to be, what do you see happening right now? What's really driving the markets? And it's options. Like nothing before. This is something we didn't have to really deal with. No, one, for sure we didn't have to deal with it because, I mean, retail investors weren't even close to being involved in this. 08, a little bit more. But today, options, oh my God, the amount of options that are sold, bought, and all that stuff, it is unbelievable. The numbers are unbelievable. And that brings into the equation the market makers, right? Because they're the ones, actually, usually, the ones selling you these options, right? Or buying options from you when you're selling them. And so I found this clip right here, very short clip, and it's really long, but I just shortened it down. I want you to understand market makers, the main job is to provide liquidity, right? That's what they do. And so what this guy explains very easily is what a market maker's basically looking for here, or what they're looking to do.
The market makers, they don't care about direction. Because as soon, like let's say that I'm the market maker and someone comes in and sells me 10 of those calls at $2.40, the first thing that I'm going to do is I'm going to hedge. I'm going to sell short shares of United Airlines to get what's called delta neutral. So now all my directional risk is gone.
And so last year, September 30th, JP Morgan bought 45,000 S&P 500 index put options, which is a lot, right? Expiring in December. And so because of this, what happened was they didn't want to pay the hefty premium, so they sold at the same time 45,000 S&P index call options, right? So now, of course, what happens? Well, the market maker had to sell the bank the puts and buy the calls the bank wanted. Both of these trades require the market maker to sell a tremendous amount of shares. Sell a tremendous amount of shares to hedge this one transaction. And according to Goldman Sachs, the amount's unknown, but it's estimated that every 1% up or down move in the markets could cause the market makers to either buy or sell around $1 billion worth of shares. So obviously that moves markets, right? Now, when the market makers began to sell this tremendous amount of shares to hedge their risk, it sent the indices lower, causing the implied volatility to rise, which is the VIX, which made the vega of the put options rise, which caused the delta of the option to rise, which caused the market makers to sell more shares to hedge this additional risk. And so again, don't get tied up in the delta and stuff, but you can see that kind of money, those amount of shares getting sold and bought by these individuals, that's where you're seeing these huge swings up and down, especially when we have a liquidity problem, which is usually what you have in down markets happening. And so it makes the moves even more, i.e. why we're going for the record of these 1% move downs intraday, 01 and 08. There's a reason why the down markets hold those records and not bull markets, okay? So I hope that makes sense. Now, Tesla, this is a big one. October 25th last year, 15 billion worth of call options were bought in Tesla stock. The majority of these purchases were in short-dated options, dated for the 29th of October, so 4 days later. This caused the market makers to have to sell the call options and buy shares to hedge their risk. I repeat, buy shares to hedge their risk. And because of the short duration of the trade, the market maker had to hedge even more aggressively by buying shares, right? And what happened? It sent Tesla to all-time new highs. Here's the chart right here. Here's the day that happened, the 4 days. And it goes up almost 20%, right? I mean, that is what we're talking about. And you see that in today's market all over the place. And so that leads us to two great examples, especially one, okay? And I talked about one of these the other day. C Limited right here goes down 88%. What happens when it goes down 88%? All of a sudden, wow, buyers start moving in, right? Or short start covering. And what's happened over the last couple of days here, if we look at the 5-minute chart, C Limited, just over not even 2 full trading days, is up 10%. And here's the poster board child for this. Look at this right here. Tupperware. Tupperware, who I said will be a penny stock soon, goes down 90%. That's a magical number, right? Bam. And look at this. The stock is up 44% in 2 trading days. And of course, don't let me forget, what also happens is the third part of the equation is, once you start to see movement, who starts to flow in? That would be us. We start to, we're the last part of the equation. You go, oh, look at that right there. Moving on in, right? And you know, if you want to look, let's see if Tupperware has had anything to make it move 44%. And if I go in here, I say, Yahoo Finance, I don't see anything. Oh, look at that. 6 days ago was the last news. Let's go into Google. Look at there. It got an upgrade from somebody I've never heard of right there, whoever stocknews.com is. Well, they gave him an upgrade. That's when it started to move, shockingly. Which, if you remember, is the same thing I said on Sunday or Monday about C Limited, where I said, oh, look at that. It gets an upgrade. Just wait and see. And boom. It ends up getting one. And this right here, whoever that is. Oh, Tupperware. Yeah, let's move that up. And so this is this revolution, right? This circle that we go through in all these stocks. And that's why I said these stocks will base out into these little boxes before the indexes ever will. Does that mean this is the bottom? No, because what do you see happening? They move it up and they start trading the heck out of it. I have a channel just like that in the Discord where somebody was trading the channel, and I put stocks that are in channels, right? And it'll go up and it'll hit the top. People are short it, come down. They buy the calls or puts, whatever they're doing, moves it back up, and they just trade the heck out of it. They've been doing it for months now. And that's just the way it is. And it don't mean we're not going any lower, because yes, if we get more bad news, of course the stocks are going lower. You can see, like Roku's a prime example, right? It was based out, dropped down again, based out, dropped down again, based out, over and over. But like I said, where do these big institutions like to short? It ain't right here. When a stock's down 90%, no sir, no sir. You know, and that's why I said you see on the SPY, there's a certain level they want to get it to when they start piling in those shorts. And everybody's looking at that certain level. It's usually going to be the golden pocket or 4,100, whatever it is. It's one of those numbers I put on there a million times for you. But that's what they're looking at, right? They push it up to try to short it down some more, because shorting a stock when it's already down 90%, that can be pretty dang risky, right? And so, and the reason why the market makers have to buy or sell the shares, it will be basically, if they didn't do that, it's supposed to be illegal, because you're basically shorting shares you don't have. But it's kind of like what happened to GameStop in a way, and AMC and stuff like that. And so that's why that has to happen, right? And don't even get me into it. I've done a video on this about how market makers control what's going into dark pools and then hitting the open market. That's a whole different ball game, by the way. And so just think about it. If you're short a stock and you control what goes in the open market, which means it does affect the price, versus going into dark pools, which doesn't affect the price immediately, you know, you can move some stocks pretty fast, right? And you see that, okay? You see that happening. You know, I'm not even going to say the name of it because I'll get hit by bots, but it starts with a C. It's a type of investment. It's down huge today, right? But that is manipulated probably more than anything else by the big whales and everybody else out there. So, you know, but anyway, I just want to bring that to you. I hope it makes sense. Please let me know in the comments if that made any sense. And please also, if you're one of these experts in market makers and options, I never claim to be. I just present what I find. then, please put down in the comments if we missed anything or need to add something. Because again, this is the time to learn this stuff, guys. And that's why I always said you have to try to follow the big money. Don't follow me. Don't follow your mother or your sister, the guy in the elevator. Follow the guy that works at Goldman Sachs when he's talking about, yeah, we're going to, buy 1,000 shares or whatever, $1 billion shares of calls on SPY tomorrow. I mean, that's what's moving the markets, especially, and that's what's causing all this volatility. And what's funny is the VIX. Look at the VIX. It's just still sitting in that little range I told you, right? And the SPY is doing the same thing. It's kind of tightening up. And so there's going to be a move one way or the other, that's for sure. It all just happens to coincide with Thursday, it looks like to me, or maybe tomorrow after the election or whatever. But, we'll see. But anyway, hope you got something out of it. Hit the like, subscribe if you did. Really appreciate it. And I'll see you guys later.